50 years ago today, financial services firm and NYSE listed company Charles Schwab challenged the status quo by lowering commissions after the SEC abolished fixed brokerage commissions on what is known as May Day, May 1st of 1975. Today, Schwab is making headlines again, introducing a new holiday called National Investing Day. And in celebration, the company has more on this key announcement. Here's more from Jonathan Craig, Charles Schwab's head of retail investing. Let's take a look.
In honor of National Investing Day, the Charles Schwab Foundation and the Charles R. Schwab Foundation for Financial Freedom are making a $1 million donation to the SIFMA Foundation to help support their stock market simulation game, a game designed to bring more and more younger investors into the markets and understanding the markets. Making this donation makes sense because we've had a long-term commitment to breaking down barriers and bringing in more and more investors into investing. It's also why we do work with youth organizations across the country, including the Boys and Girls Club of America, to support financial literacy. All of this is aimed at bringing more and more investors in and also ensuring that they have the education and the support they need to be successful.
I spoke with Craig about National Investing Day and how the brokerage is helping investors navigate the latest volatility. Let's take a look.
Yeah, it really is an exciting day. 50 years ago today, May 1st, 1975, Congress eliminated the fixed rate commissions in favor of more competitive negotiated commissions. And prior to that, investing was really reserved for the rich. On that day, many firms raised their commissions, but Charles Schwab did the opposite. We lowered commissions, and it was really part of a 50-year commitment to lowering costs and removing barriers for individual investors. And we've made a lot of progress as a firm. We've made a lot of progress as an industry. So National Investing Day is really an opportunity to celebrate that progress and hopefully inspire more and more people to get invested.
What should investors take away from this inspiration? How should they act on it?
Well, the most important thing we say, no two investors are alike, but the most important thing we say to investors is just get invested, stay engaged. We have a set of investing principles we reiterate frequently. Have a plan, be diversified, rebalance, try to minimize your cost and taxes, and try to ignore the noise. In an environment like this today, there's a lot of noise, but I think the most important thing is that investors get invested, stay invested, and they work with a partner like Charles Schwab to help them do it.
What trends, Jonathan, are you seeing in the retail investing and trading space?
Yeah, it really is an interesting time to be an investor. There's a few trends, I guess, I'd highlight. One, there's absolutely a bull market for advice, and that should not be a surprise when you look at the markets over the last several years. I think 2022, all asset classes were down many double digits. 2023, we had the fastest rate rise in history and a very strong bull market, similar in 2024, but real concentrated, a bull market concentrated in the Mag 7. And then, of course, in 2025, a lot of uncertainty and volatility. In that environment, clients are more and more clients at all ages and all asset levels are looking for advice. And not just fee-based advice, but just coaching, education, and support. So that is certainly a trend. Another trend I'd highlight is that clients are looking for new products and new innovations in financial services. Sort of gone are the day where most investors could just invest in a 60-40 mutual fund. Clients are looking for new asset classes, things like alternative investments, crypto, 24/5 trading, thematic investing, direct indexing. So a lot of new innovation there. And the last thing I'd say, I'll just paraphrase our CEO, Rick Wurster. He talks about a bull market for convenience. Very simply, clients want to work with a firm in our industry and in all industries that respects their time. And in our industry, that means there's more and more consolidation. People want to do all their financial services in one place. And they want curation and personalization in all aspects of their relationship with a firm, whether it's the service they get, the products or solutions they buy, the experiences they have. So a lot of new and exciting and interesting trends in retail investing.
How important are ease, especially digital ease, and accessibility to the retail trader and investor today?
There's nothing more important, I would say, than ease and accessibility, and that's why certainly we at Schwab, that's the number one priority, to make sure that our platforms and our technology is there for our clients. That is absolutely sort of what we call the brilliant basics. But at the same time, we believe, and we've always believed, that to win in financial services and to serve clients well, you need both the best of people and technology. I think if you look way back, way back to Mayday, investing was very much, or 50 years ago, investing was very much a people-based business, and that continued for a while. And then over time, a lot of people talked about technology taking over investing. I think for us, it's always been both, and I think that'll always be the case.
Investor education and support, what are you finding there in terms of the demand and how Schwab is delivering on that?
Yeah, the demand is, I would say, skyrocketed. I think if you look at the market environment, particularly over the last couple of months, it's probably an understatement to say there's a lot of uncertainty out there and a lot of volatility. And in that environment, clients are leaning in and looking for that education, that support. We've seen a 40x increase in engagement with our market insights, our market education, and our commentary over the last several months, and that's in direct response to the market. So I think we're again, it's a focus area for us, providing not just great platforms and great service, but all the education and support that is critically important to folks just getting started, but even the long-term or the most serious investors are still looking for that support.
And how are retail clients responding to this current market environment that has seen volatility pick up?
Yeah, I think the word I'd probably use is engagement. We've seen incredible engagement with the markets over the last several months. In Q1, I think we had two of our highest trading days we've ever had. We had over 500 million logins to Schwab.com in Q1. As I mentioned, record engagement with our service, our education, our insights, and we added over 1 million new accounts in Q1. So, no two investors are acting similarly, but I'd say all seem to be engaging at levels we haven't seen in the past. In terms of client sentiment in this market, I would say it certainly turned a bit bearish, without question. There are certainly clients have some concern, as you'd expect, given the pullback in the markets and the volatility. But overall, I think our clients remain very optimistic over the long term. At the end of the day, investing is really an act of optimism, so you need to be optimistic to be an investor.
What has the volatility meant for trading volume? Have you seen more of it?
Absolutely. As I mentioned, we've had record trading volume in Q1, and that's only accelerated into Q2. So we're absolutely seeing that engagement, and we're certainly prepared to serve those clients and doing it very well with robust and resilient platforms and great digital experiences. But without question, clients are trading more as the market, as they experience the volatility that we're all seeing.
And has it led to more brokerage accounts, more platform logins as the volatility has picked up?
Without question, we added over 1 million new accounts in Q1. That has continued into Q2. Record logins in Q1, and certainly that has continued as well. So, again, engagement is a good thing. I think what we tell our investors is you've got to start early, stay invested, stay engaged, but also don't react to every single piece of news that comes out, because that also can be a little bit distracting to your long-term financial plan or investing plan or trading plan. So it's getting that balance right of both being engaged but not overreacting to every piece of news that comes out.
We've talked about the services that Schwab provides, Jonathan, of course, the increased demand of late. Are there other ways that you can share in terms of how Charles Schwab, with its decades of experience, is stepping in to help clients amid this active environment?
I would say a couple of things. First, for us, it's about continuing to innovate and bringing more and more capabilities to market to serve these clients in particular environments like this. And that means more and more in wealth management, critically important, serving that bull market for advice we talked about. More and more in banking, addressing that need for clients who want to consolidate and simplify their lives all within one financial services provider. And of course, continuing to support the traders in our population. We have a very significant active trading business, and those clients are always looking for more and more. So it's about innovating along those lines. It's about investing more and more in our local communities. We're going to open dozens of new branches this year, which is fantastic. We're hiring more and more financial consultants. So it's really important for us to be in the communities, bringing that best of both people and technology. And then finally, it's about having available, resilient, strong digital platforms, which is fundamental to serving clients in 2025.
All right, thanks again to Jonathan Craig and Charles Schwab for that interview.